Right, good afternoon. So this is a webinar to cover the Bloem care homes in the UK and to give an update on COVID-19 in the care home community in the UK, as well as a bit of background on what we're offering and the investments that are available. With me today, I am Alexander Knight. I'm speaking on behalf of the CrowdHub group. And with me, I have Kevin Caldwell from Bloem Care. And as mentioned, I have Alistair Barton too from Bloem Care with me. Do feel free to ask questions in the chat and we will do our best to answer them for you. So why care homes? Why is it such an interesting sector to know more about and to be interested in? Well, it really comes down to the fact that it's one of these sectors that is just incredibly fast growing. Supply is outstripping demand. The demand is outstripping supply, so there you go. And it is, there are just simply not enough rooms for people to meet the demand. Therefore, it's a growth asset class which also offers a fixed income and has a real estate potential in there too. So it's buying buildings that can be, buying UK freehold buildings that can be then leased out to care home operators at a rate to enable them to run the care homes and to pay the dividends to the shareholders of the company, which I will go through in a minute. So real estate is a great asset class to have, particularly in the UK, and even with COVID-19, everything will be more or less back in shape within a couple of years, certainly in terms of property prices. They're suffering a bit of a dip at the moment, but they will be going up, and it's a pretty good time to buy, frankly. Also, this is a fixed income asset class too. So you've got a double. It's accepted that having assets in multiple classes is a good way to diversify a portfolio. These care homes are an ongoing business which has a stable income because their occupancy rates are very high. And in this case, this has a 25-year lease, giving a stable income over a 25-year lease period. So that's why we're interested in care homes as an investment vehicle. So what will investors make from this? It's the structure's done in such a way to make sure that it ramps up in a reasonable way. 6% for the first couple of years 1 and 2, then 7% for years 3 and 4, and then, as you can see, 8% from years 5 through 10, and then 10% thereafter, which means that each of those percentages are actually what you get in terms of money paid out as dividends finally. There's also a capital uplift opportunity, which means that the value of the property is there to increase too, which adds to the overall investment. And again, so the 6, 7, 8, and 10% yields are, there aren't maintenance and upkeep costs added to that because they're all covered by the operator who, as a tenant, will maintain the building. And as we were talking about this, the minimum investment of this is £50,000, which in Singapore dollars is roughly 80,000 at the moment. The pound is at a very, very good place to be buying sterling at the moment. If you're holding non-sterling, it's a really good opportunity to buy it at a couple of years low. But now, once COVID is hitting the rear view mirror, and once Brexit is sorted out, the sterling will start appreciating again. So giving you a great investment opportunity here with the returns being as they are, and the extra bonus of the currency improving in value. So how does it work? So we set it up through a single private limited company, a special purpose vehicle, which will buy the asset once £1.3 million in funds are accumulated. We've got 57% of people of this share offering filled. Then once we've hit that 1.3 million, the SPV will acquire the asset, which is already a fully operational care home, which is in a freehold UK property. The SPV then leases out the asset to the care home operator, in this case, Bloem Care, who then pays rent as a lessee would do. So it's a tenancy agreement that is being fulfilled by Bloem Care as the tenant. And the SPV then pays the shareholder their quarterly dividends. So it's a very straightforward play. The investor owns shares in a company, the company owns a building, the company's paid rent for that building, that's it. It's so very straightforward. Being Singapore-based, it makes a lot of sense for us to use Singapore private limited companies. I mean, the regulations in Singapore are very transparent. There are many benefits. Buying it through a private limited company in Singapore would also mean that there's no stamp duty, as you would find with individual unitized sales, if buying individual rooms, that is. There would be no legal conveyancing fees either. So again, buying shares, it reduces the overall overhead of buying the properties because it's not individual units, it's one property, so only one set of conveyancing fees, one set of stamp duties paid. That's all paid for by the SPV. There's no capital gains taxes for once the sale of the shares goes through, should you choose to exit. There are no exorbitant management fees. What you see is what you get in terms of the yields in cash. It's all transparent. We're based here in Singapore. The CrowdHub group, who manages the SPV, is based here in Singapore. So you're welcome to come over and inspect the books whenever you like. And of course, it's an ACRA registered company, which is Singapore regulated. So it's the transparency aspect of this for us, certainly as the CrowdHub group, is very important. The main idea that we hold dear is that customers end up keeping more of their own money and making more money out of their own money, as opposed to having to spend lots of money on management fees and legal costs, etc. And how is this a good way to invest? It really is, because unlike a REIT, where something like COVID could potentially bring down an entire REIT. For example, look at the emptiness of the shopping malls at the moment, the lack of till receipts and things like this. It's going to have some really serious impact on these real estate investment trusts. Buying assets in separate SPVs ring fences them, which means that they're not affected by other assets that could have a knock-on effect. Then also it means that the SPV can sell the asset and return the funds to investors should the business be sold. Also, again, it's a transparent, regulated, ACRA registered private limited company, which gives the added benefit of transparency, which is very important. Now, how is this paid? How is the 6% rising to 10% paid? How is it assured? We don't use the word guaranteed because it's just not a good word to use in financial circles, but we do assure this rental yield, because that's exactly what it is. It's a tenancy agreement, effectively bringing in the rental yield. And it's over a 25-year lease, which means that every year the rent has to be paid or they can't operate the care home. It's as simple as that. It's like renting a flat or renting anything else that you do on a leasehold. If the rent's not paid, another tenant is found. So it's very, very straightforward in that respect. And it's over a 25-year period, which is obviously very, very long, and gives a good time frame for people to be able to build up assurance in the property as well. The SPV banks with Standard Chartered here in Singapore, meaning that if you have Singapore bank account, any transfer fees will be minimal for the dividend payments, which are paid quarterly. And it also means that again, more transparency, Singapore-based. We focus on the Singapore-based all the time on this because it's because of the way that this country in Singapore works is very transparent and investor friendly, which is what we want to play, which is what we want to use. How about taxes and fees? Now, this is another great thing about doing it in Singapore. Returns are paid as dividends from the Singapore Private Limited Company. Now, personal income tax on dividends doesn't exist in Singapore. So that means that there's no tax to be paid on the dividends. And all fees and costs are paid for by the SPV. So that's kind of a win-win, really. If you were to invest £100,000, your return on that investment would be 6%, so £6,000 for years 1 and 2, then 7%, and then 8%, and then 10%. So it's quite straightforward in the respect of being able to get transparency in the amount of money you're being paid. How do I get my exit sorted out? Now, you can sell shares to another shareholder within the company. The reality is we've got other investment vehicles like this running. And when people want to exit, other shareholders within the company will typically buy the shares because it's such a good deal, and the returns are paid on time and they're assured. So if you want to liquidate your holding, another shareholder will buy it from you. That's 90% of what happens 90% of the time. For 10% of the time, it's a bit less than that. 8% of the time, we help sell the shares to somebody else within the CrowdHub group network, which means that we will send an email to our investor saying, hey, we've got this great opportunity. You were unlucky, you weren't able to subscribe to the shares because it was full or something like that. Would you like to now buy shares in it because an opportunity is opened? And if that were for some reason to not work, then we can help you sell the shares to a third party. Typically, a share sale transaction would take up to from 2 to 3 months on average. So again, exit, transparent, straightforward. And these are the most important things as far as we're concerned, is just being able to make money, get it out if you need to, no hassles. Now, there's a lot of interesting things about the care homes and government funding. Prior to COVID-19, the government had pledged £1.5 billion a year for the next 5 years for adult social care. As you can read here, the Savills Q4 2019 report, it's all about supply. The population is aging. The UK care home stock currently is in need of modernisation. There's need of more supply. Beds are only increasing by 0.9%, only increased by 0.9% between 2014 and 2019, while the population of people 65 plus, 85 plus rather, grew by 9%. You can see there's a huge supply-demand disparity here. So the Savills market structure, again, this is just to reinforce the views on the care home numbers. that we're seeing the demand and supply and demand issues that are providing the customers for this, for these care homes. And you can see the largest 5 operators, their share has fallen from 16% to 13% over a 5-year period. And they're operating 12,000 fewer beds than they did 5 years ago. This is an astronomical number that it should be going the other way around. And this is what Bloem Care is trying to fix. So it's all about the supply and demand. Will the dividends get paid? Will the rent get paid? Will you see your funds coming as they've been promised? And the answer to that is yes, yes, and yes. Then we have a Knight Frank 2019 report and some government statistics. Average occupancies of nearly 90%. That's a phenomenal occupancy rate, and that 10% turnover is typically because the rooms, the customers need replacing. As it is what it is. This is a business where there is turnover, and the turnover is around 10%, but that's due to the supply and demand issues. They're quickly filled up again, and it must be said that this is the whole world, the whole developed world is aging. So the UK is a particular case of this. There are so many people who are acquiring care home beds. The amount of them is just increasing and increasing. So it's going to be one of these businesses that is going to be just perfect for this type of investment for many years to come. Now, at this point, I'd like to hand over to Kevin, who will be telling us a bit about the COVID update. And so over to you, Kevin. I think you need to unmute yourself, mate.
My apologies. Thank you, Alex. Yeah. I don't know if you can all see me. Alex, give me a nod if you can see me on the screen. Okay. Good afternoon. Hope you're all staying safe and well during these strange times. Before I go into the details of Bloem Care and the offer we have, the facility we're acquiring and the existing facilities we have, give a little bit of update on COVID-19 and the care sector in the UK. If you keep up to date with the UK news, you'll know that the news agencies in the UK are never positive about very much anything to do with the government, and there's never any good news to be had. Whereas in fact the government has done a massive amount and put a huge effort into the care sector since COVID-19 came to the forefront. And just as an example, they have documentation, they have guidance. So one of them is a comprehensive document. You can go online, guidance for coronavirus care home support package, which covers all aspects within care homes of managing the disease, in the infection prevention and control, the increased support by the NHS that is there for the care homes. The comprehensive testing is available for all care home residents and staff. Staffing itself, they have strict rules and regulations about the movement of staff and the incoming staff. For example, for a care home business that has more than one care home, they very much limit the movement of staff between those care homes and focus on that individual staying at one care home. Similarly with agency staff on that. And the funding of the care homes, which I'll go into in a bit more detail in a short while. Other things that they cover there is the supply of PPE, personal protective equipment, even down to how to wear that, when to wear it, and the ongoing testing and guidance of staff. So thank you, Alex. Next slide. So funding, Alex mentioned earlier that the care sector is very much in the forefront of the UK government. So since the outbreak of COVID-19, there's been a massive amount of additional funding. So as early as March, they announced 1.6 billion for the funding of local government. Now, again, I'll go into a little bit more detail later, but a majority of care home residents are not particularly funded by the NHS, but by the local authority. And that's where a lot of this funding is aimed towards. A further 1.3 billion go to NHS and social care. And then again in April, a further 1.6 billion for local government and another 600 million to support care providers on that. And that's not so much cash in the bank for us, the operators. It's more to support the local authorities, to finance the testing and PPE. PPE has been a big issue in the news. We've not had any issue in our care homes with being able to get hold of PPE. It's been supplied by the local authorities, and it all comes out of this funding by the government. Thanks, Alex. So in our care homes, we operate a care home at the moment, Freckleton Lodge, and the guidelines from the government were put out very, very early on, and we went into lockdown very, very early on. And it's got to be said that lockdown in a care home in the UK is not an unusual occurrence. A lot of the residents, they're very vulnerable to any type of disease or illness. So if there is a major illness in any care home, we soon go into lockdown, meaning we can't have too much social interaction. We have to restrict the visitors of families and friends. So it's not something new to care home operators is having to go into lockdown. Granted, this is a bit more strict, a bit more governed, but it's something that procedures are in place for, and they've been managed very well by the care sector. In our care home, Freckleton Lodge, the one we operate at the moment, and it's true to be said for the care homes that we're acquiring, which is a group of 3, we have 0 cases of COVID-19. We have had vacancies come up, but that's a natural turnaround in the nature of care homes. So occupancy is still up at 90% plus for our care home and the ones we're buying. Obviously, it's been a bit of a challenge of replacing residents in those rooms with the restrictions into visiting, etc. But hopefully that will all change soon, and there's going to be a massive waiting list to fill those empty rooms. And of course, staff and family support has been the key. Staff have been fantastic. We have, staff has been an issue. If anyone shows any symptoms of the virus, of course, they can't go into work, and we have to replace that with agency staff. And family are very supportive with, although they can't visit their relatives, been very supportive of sending gifts and making life a lot much better for the residents and family members. Thanks, Alex. So now down to the acquisition that we are in the midst of. We're purchasing Fairmont, a care home in Preston. We're actually purchasing this as a group of 3 care homes from a company. This one is, we're raising funds through the CrowdHub group. I've worked with Alex and his team for a number of months now. It's 23 beds, it's fully operational. It's been around since the early 80s, fully residential room with ensuite rooms. And we're looking to raise 1.3 million to acquire the care home and to do a slight bit of refurbishment that is needed in the care home. Thanks, Alex. So Bloem Care Group, we as operators have been operating in the UK for just over 2 years now. We acquired a care home, Freckleton Lodge in Preston, which wasn't operating too well, and I'll go into more of the regulatory requirements and auditing when it comes to the operation of care homes. But we purchased it and took control of it a couple of years ago and turned it round from being almost on the verge of closure to being an award-winning care home with 100% occupancy. So we specialise really now, and my business colleague Alistair Barton, who's on the line and may come into the Q&As later, specialise in acquiring the right care homes. So I don't like to use the word distressed assets, but maybe motivated sellers. So with Freckleton Lodge, it was distressed in the fact the quality was very poor. Whereas JT Care Homes, it's not distressed, but they're motivated sellers. It's a family business. They've been in the business for 30 years. They wanted to keep it local. It's in the same area as our existing care home. Alistair built a good relationship with them and got this at the right price. Financing of social care. And when I say financing, I mean for the residents, not particularly for the purchasing of the facility. A large majority of residents at care homes are fully funded either by the local authority or the National Health. It's a very, very complicated issue, but in simple terms, they're means tested. And if they can't afford to cover their own care, then either the local authority or the NHS will step in and fund that caring. At our existing care home, around 50% of our residents are fully funded by the local authority. Thanks, Alex. I talk about the regulatory requirements quite heavily. Any healthcare facility in the UK has to be registered with the Care Quality Commission, the CQC. The CQC is an independent regulatory body, reports directly to the body, that every healthcare facility has to be registered with, whether it be a dentist, doctor's surgery, hospital, care home. So not every Tom, Dick and Harry can go and operate a healthcare facility in the UK. It takes a lot of due diligence and it takes the right individuals. Every business has to have what they call a nominated individual to be ultimately responsible for the care that is given by that facility. And it's very transparent. That screenshot you'll see on the bottom right of this presentation, this slide. You can go on the CQC website, type in Freckleton Lodge. That is our existing care home that we've run for the past couple of years. And you can click on there and see the details of the last audit that was done by the CQC. And these are very comprehensive inspections and audits. It's not a quick look in. They come into the care home, they interview the staff, they interview the residents, and it's a very detailed report that is produced, which you will be able to see on the website there. And you can see that we've got good across all aspects of the last CQC audit that we've had. Thanks, Alex. Bloem Care Group, I say we have some fantastic individuals. I'm based in Singapore. I should have said that early on. I'm a director and founder of the company. We have directors in the UK looking after the acquisition and sourcing of care homes, as well as the ongoing management of the care homes. We purchased Freckleton Lodge and took management of Freckleton Lodge a couple of years ago. We've won awards at carehome.co.uk, one of the top 20 care homes in the UK, which we've won since taking over. And you'll see, as we said, on the CQC website, the fantastic audits and reports that we've had there. And that's key really to any investment that you're looking at that is assuring a return. It's all down to the end user and the occupancy of that facility. Alex, thank you. So to summarize, I'll pass you back to Alex in a minute and we'll see what questions we have. It's a very simple financial structure that a company incorporated here in Singapore owns the freehold of the facility in the UK. We, Bloem Care, as the experienced operator, manage all aspects of the running of that care home. So the marketing, the occupancy, the care of the residents, the upkeep, the maintenance. It's a completely hands-free investment, and those returns are net of all those costs. So there's freehold ownership where returns are paid as a dividend. There's a pre-signed 25-year lease between that SPV company and us, Bloem Care, for the management of that care home. So please do go on the Q&A chat, and Alex will run through a few of those questions shortly, and we'll see if we can answer them all for you. Thank you very much. To you, Alex.
Thank you, Kevin. That's excellent. Yes, please enter any questions you may have into the chat, and we'll do our best to answer them. I think we've covered quite a lot of it, but I'm sure that there are still questions. If you would like to contact me directly, feel free to. If you can, you can use this QR code to get my email address and phone number, which are at the bottom of the screen anyway. But this might just be an easier way for you to get a contact V card that'll just open straight up on your hand phone. And I'd be more than happy to answer any questions. We'll leave it open for a couple of minutes, and if we have some questions, then we'll...
There are a few questions there, Alex, that we can address.
What's the difference between this project and a buy-to-let project? So a buy-to-let project would be you buy an apartment, which, let's say that you buy a flat for £100,000, you would have to do legal work with it to get the conveyancing done. You would have to pay stamp duty on it, which would add several £1,000s to the end price. Whereas with this is essentially a buy-to-let, because you're buying shares in a company that owns a UK freehold property, which is being let out. So it's a differently structured buy-to-let. I think that's so it's all run through a Singapore private limited company. Who manages the SPV? The SPV is managed by the CrowdHub group. I work with my colleague Clive Wright, who is a director of the SPV, which is called CHG Care 1 Private Limited. And so that's all very transparent. And as I say, our offices are in Beach Road, and you're welcome to come and inspect the books and discuss it with us at any time, or, I mean, obviously when circuit breaker's over. The next question is, so investors place money into a Singapore registered company and become a shareholder. Isn't this crowdfunding? It's crowd investing. And we, as CrowdHub Group, are simply selling shares in the SPV so that people are able to participate. The next question, will CrowdHub Group charge any management fee? No. We are paid a commission on a marketing service fee, sorry, by Bloem Care Group to have helped market this project. So if you have any other questions, please just
Alex,
let me know.
There are some questions actually under the Q&A tab.
Okay.
Those were in the chat, and there's a Q&A tab there. If you'd like me to address a couple of those I've got in front of me.
Ah, yes, here we go.
Yeah.
So how is it SG registered? So that's from Mr. Lau. It's a Singapore private limited company, which we have a directorship of under Clive Wright as the director of that company. So he's a Singapore PR, and both Clive and I have lived in Singapore. Well, I've lived here for 14 years, and Clive, I think 23 or 24. So it's just a normal ACRA registered company. Next question is the Singapore company regulated by MAS? No, it's not. It's regulated by ACRA, which is the accounting. Let me just come out of that. Sorry, 1 second. Let me just get this. the Q&A questions up a little bit more. Sorry, my apologies. So the Singapore company is not registered, regulated by the MAS. Sorry, I've lost the Q. Kev, can you read out the Q&A questions? Sorry, mate, I've lost them.
Let me unmute. So what's about the regulation?
Oh yeah,
MAS?
got it.
No. Yes. And you have the questions in front of you
Yes,
now?
I do. So
okay.
When is the first dividend due to be paid? Kevin, do you want to answer that one?
Yeah, sure. First dividend is due to be paid after the 5th quarter. But that dividend will include the returns for 5 quarters. So it'll be the full year's returns plus 1 quarter. And then it'll be quarterly after that, quarterly in arrears. The reason we do that is really for cash flow in the operations in the first 12 months. As part of the fundraise, we have allowed for some refurbishment. We're in a fortunate position for Fairmont that it doesn't need major refurbishment, but we would like to bring it up to our brand. So occupancy might drop a little bit as we redecorate rooms, and we just want to keep the cash flow within the organisation. But that can all be managed within the first few months, and we'll pay that first quarter to catch up after the 5th quarter of your investment.
Next question we have is, at what point can you exit and get full payment of capital and interests? Any other ways to exit without having to find a buyer to purchase your shares? So that one is relatively straightforward, that you'll be able to exit basically at any time if you can get if you can get someone to another party to buy your shares. There isn't another way to exit apart from having someone else buy your shares, because this is a shareholding in a company, and to exit any company that you have stock in, someone else has to buy the shares from you to take them over from you. So then we have a question: upon subsequent sale of the shares, how is the share price determined? The share price is at value, at face value. The uplift that there could potentially be is after a 5 to 6 year period, should Bloem Care sell the business to another operator who would then take over the lease of the who possibly would want to sell the property. The next question: what is the estimated population of the aged? I think they're from 65 plus, aren't they, Kevin?
Well, yeah, but I presume the population means that the demand in the UK. Just to give a bit more on that, as we're growing our business, we're focusing more on residential dementia care as opposed to nursing care. Nursing care, there is a staffing issue. There's a shortage of nurses in the UK. So the care homes that we acquire, including the one we own, not necessarily give nursing, but social care to those that can't look after themselves. The figures at the moment in England is there's 850,000 people suffering from dementia. Many of them over 65. The forecast, this is as a government forecast, that's to go to 2 million by the year 2030. So a massive growth in demand on that.
Next question we have is, for the aged who can afford to stay at the facility, how much will they pay per month? So that it's around £700 a week, isn't it, Kevin?
It's about. I mean, it depends on the care home. Where we are based, you know, I won't lie to everyone and say it's the most salubrious part of the UK. The financial model wouldn't work if we were down in the West End of London. So the average social care room in the UK is around £625 a week. The local authority pay around that, and they pay that to us directly for residents that need that. For those that can afford it, they do tend to pay a premium. So although it's good for us to have guaranteed revenue with the lower income residents that get fully funded by the local authority, it is always our aim to increase our standard to the extent where we attract more private paying residents, because there is more of a premium on the private paying residents. And I'm not talking double, they probably pay between 10 and 15% more than fully funded residents.
Next question. What is the status of purchase of additional homes? Throw that one to you, Kev, again.
Yes, well, we fully own the Freckleton Lodge. We have done for quite a while. We are through the process of purchasing this group of 3. Obviously, COVID-19 has had a massive impact on the schedule on this purchase. For example, we can't get survey done. We can't get surveyors in the building. Hopefully that's going to change. Well, it has changed, and we're just trying to get an appointment with the surveyors to go in. We are completely legally committed to purchasing these care homes, and hopefully we will be completing on all 3 of them within the next couple of months. Moving forward, we do target maybe 3 or 4 care homes every year on growing our portfolio.
Next question. When will be the maturity of the investment after 25 years of the investment? It's an ongoing process. This lease is up for renewal ultimately in 25 years. The building is owned by the company, so should that lease expire in 25 years, another lease would be agreed with the care home operator. When will the principal be returned back to the investor? The principal is returned to the investor once a sale takes place of their shares. Another question. How do you determine the number of shares, risk of oversubscribing and diluting possible returns? There's no dilution of any shares. There are 1.3 million shares plus 2. The 2 are one for the CrowdHub group and one for Bloem Care. The 1.3 million shares are £1 each. There's no dilution and no oversubscribing. There's a finite amount of shares to be had, and that's it. Another question. Who are the owners of Bloem Care? Can I give that one to you, Kev, please?
Yeah, sure. Well, there's Bloem Care, there's 4 shareholders. In fact, 5, including my wife, who are based in Singapore. There's 2 based in the UK. One of them, Simon Moppet, is specialised in the operations side of the business. Once we acquire the care homes and join the acquisition, obviously does the due diligence. He ensures that the businesses are run as we wish. There's Alistair Barton, who is in on this call, our business development director, both of which have had many, many years experience in the care sector. So Alistair is very experienced with his network of acquiring the right care homes and seeing through that acquisition process. And there's myself and Singaporean lady Joan Lim, who are shareholders here in Singapore, that manage the fundraising and the relationship with our investors moving forward.
Okay, great. Thank you very much, Kevin. I think that's it. If there aren't any more questions, we will speak to you all very soon, I suppose. We'll be sending out the presentation to everyone momentarily, so you'll be able to have a look at it. And please feel free to contact me with any questions that you may have, and I shall be getting in touch with you all to see if we can move this forward this week at some point. So thank you very much indeed for all of your time. Thank you, Kevin. Thank you, Alistair.
You're welcome.
And we hope to see you all soon, and stay safe, everybody. Thank you very much.
Thank you, Alex. Thank you, everybody. Bye-bye.